Good morning, everyone, or good afternoon, or good evening. Hope our American friends had a good Thanksgiving, and hope everybody had a good week. Black Friday, very exciting. Things remain tough and tense for Ukraine, but as usual, Taco Trump allowing Steve Witkoff to just run roughshod over anything productive for a free and democratic Ukraine. We're going to have to come back to that. I want to go right into Bitcoin. A little bit of a relief rally. Going to have to see how long it lasts. 91.5 into the model today. Remember I showed you this a couple days ago. I think it was Kurt that asked about, how it could look by the end of the year. Of course, one never knows, but using statistics like this, we can say, okay, probabilistically, 70% chance Bitcoin is above this blue line into this rainbow by the end of the year. All right, which is still right about today's price based on the quantile model. It's slightly below today's price. I'm looking at number 3 there. All right, so the 30th percentile, that means 30% of the time based on the power curve, our lovely power curve where you can put a lot of, I don't want to say faith, but take some comfort in it. 30% of the time based on that trend, you're below this rainbow. 70% of the time you're in the rainbow. And since we haven't had a major blow off top, yet, very difficult for me to believe that we have a major puke down to, the bargain basement levels. Very difficult for me to see that. I know that our TA friends who do a lot of straight lines on charts based on wicks, some of them have views like this, that it could go down, but statistically based on the power curve, that shows a very unlikely possibility that it would go, even below 60,000. I've heard crazy claims, 15,000 again. So we can still take a lot of comfort in what we have here. Power curve of network adoption. We're going to have a lot of interesting charts, I think, in the next few weeks. A lot of things are being developed here on my end, and Wall Street is still coming, so all that is very exciting. But let's, again, take a look at what we got to contend with, all right? Showed this yesterday. I just want to show it again. All right, this is the market cap of the top 8 tech stocks. All the ones you know: Apple, Google, Microsoft, Nvidia, Amazon. And I'm not including Tesla. People call that like a tech stock. I think it's an overvalued car stock, auto stock. But we got Broadcom and Oracle, all right, are the lower level market cap stocks, but still pretty huge in this stack. All right, so bottom line, when you look at things in exponential space, and again, this is power. It's both log space, but power curves have this gentle, stable curve. The rest of the stock market does not. It's a straight line on log scale, but that can breed a lot of volatility, a lot of instability. It is absolutely possible with the AI boom, which started precisely here, that for years we could be above the 9 like this. Right? For 2 years we were above it here, and we're flirting with it now. It's absolutely possible. But what I want to say is that because Bitcoin is so low relative to the curve, all right, let's take off some more noise. Okay, let's leave the 9. Here's the 9 for Bitcoin. We got the 9 for tech. Okay, and these are market cap numbers, right? So it's basically the price, but easiest way to aggregate it is just to take the market cap. 24 trillion is the 90. And right now these stocks are at 22.7 as of yesterday's close. Well above the trend. All right, Bitcoin's well below its power trend. So it doesn't necessarily mean that all the value for Bitcoin has to come from these top tech stocks. But as we know, Bitcoin is a revolutionary tech, and there are plenty of people in Silicon Valley, no matter what they say, that hold Bitcoin. So I could see these numbers starting to trade valuations a lot more. It's possible it can swing back, and then Bitcoin can swing back as well towards the mean. If you did it as a percentage, it looks even more impressive for what Bitcoin could do as far as swinging, right? I showed this again yesterday, but I just want to show it again. Right, this is where Bitcoin has been all through the cycle. You can see the peaks are even stronger here. This is now percent of these top 8 tech stocks. All right, so back in 2013, it was still nothing, less than 1% of what's going on with the big tech players. Mark Zuckerberg wasn't doing anything. Winklevi were competing with Facebook employees and other people that wanted to get bought out by Facebook. If you read I forget that book now by that Bitcoin author who documented this time for the Winklevi. Anyway, Zuckerberg didn't start paying attention until somewhere here. At this point, we got to 7.58% of the market cap. And that turned out to be a top. Now we are just painting new lows every day. All right, so this is Bitcoin market cap relative to the top 8 tech companies. All right, which includes Nvidia. It includes Apple, Google, Amazon, Microsoft. It's still a power curve. All right, it's a 92% power curve, but it's, we're struggling, certainly struggling, and we can go on struggling for years, like I said, if this stays above the 9. But I think another way to look at this is Again, it's just like we did with the gold chart, right? Which I'll show again in a second. But if you're focused as a tech investor and you start to turn around and see, well, where's Bitcoin now relative to my tech holdings? And you want to do some rebalancing or whatever, Bitcoin's actually extremely cheap based on the valuations of the AI trade, the tech trade. It's extremely cheap. Right? It's still at that 7%, which happened to match pretty close to the 2017 high, right? 7.5% right there on January 15th, or December 16th was, I think, the top. Got to 8.9, got to almost 9% of the tech trade. Now, Bitcoin is 7.6. Still growing, still accreting, but at a much slower rate. And, you know, it certainly seems like a falling knife situation. I mean, it's as low as it's ever been relative to its own power trend, right? It's extremely low. Broke down from August. This, to me, will be very interesting to watch over the next few years. Just like the gold trade. Just like the gold trade. Because I do think there's a lot of wealth that can swing back and forth between these markets. Good morning, Kevin. Thank you for tuning in. So early for you. Hope you had a great Thanksgiving. So I think this is a good one. We'll keep tracking this one. I don't have the quantile still yet for gold. Next week, we'll have it for sure. Not 2 weeks, as the old tech response typically is from coders next week. But here's my multiple analysis. It's a very similar idea, but it's these bands are now based on the trend at the time multiples. Right? So these multiples will always stay fixed. It's different than the percentile. So the 90th will be if we're at 1.9x the power curve, and the 10th is 0.3x the power curve. And as you would expect, we're setting new lows in this chart as well. But again, this is gold, so this is not, shouldn't say as you would expect, but we've looked at this for a while. Gold is flying, Bitcoin is super cheap. So again, this is another trade, just like this trade, where if you have wealth in tech, if you have wealth in gold, and then you stop for a second, you look at Bitcoin, you understand the value of Bitcoin, the utility of Bitcoin. It's, relatively speaking, as cheap as it's ever been. Relatively speaking. Of course, it could go lower. Can always go lower. Right? We pierced through this level back in 2022. The old crypto winter, as they call it, we were below it. And again, I thought I'd be talking to you guys, just having fun, playing around with how many days we'd be above the 9 by now and planning our retirement, right? It's never going to be so easy. I want to switch really quick to another one. So Steven, we interviewed last Friday. I think everybody enjoyed that show. He's quoting some work Giovanni did, I think back in 2019. I'll talk about it. So this is pretty interesting stuff. Let me just read it. My new thesis is the bubbles are log periodic in time, not equally spaced. The 2011 bubble matters just as much in the reckoning as the 2013, 2017 ones. The early bubbles are the clearest, and 2011 is not anomalous, but the first fundamental occurrence of a log, or if a log periodic schedule obtains. A log periodic schedule is more natural for a scale invariant power law nature of Bitcoin. All right, so scale invariance is what a power law is. It means we can measure it at any time, and it will be proportionate to whatever you're measuring. All right, in this case, it's price to age of the network, price to age of the network. That's why it's a straight line on log. Okay, so a log periodic schedule is more natural for the scale invariant power law nature of Bitcoin. The 2021 top, I presume he's saying, was anomalous in being double and noticeably weaker and a bit early, since the first of the two had the larger residual. This suggests it was not a fundamental but a harmonic. This is again something I need to test myself because I'm more applied statistics, but understanding a fundamental versus a harmonic I can't explain to you right now. A log periodic schedule would explain why we did not have a bubble in 2025. We have had oscillations or waves. This also helps in understanding the relative performance versus gold in 2025. On a log periodic rhythm, the next fundamental bubble would be in 2027. Now, he talked about some log periodicity in the show we did on Friday. So again, regardless, the bubbles have been weakening, 1 divided by the age of Bitcoin. More detail, and this is something Giovanni did, which is talking about something that Sminston did. He's actually saying the first top, which happened before the halvings, was anomalous. Now, Stephen is saying it's not anomalous, the 2011. And then I think, so there might be some dispute or discussion there. I actually started with log periodic bubbles to settle on periodic ones. The beauty of using log periodic ones in the first bubble is included naturally. So here we go to this chart. From 2019. Updated model of BTC with log periodic bubbles. The fit goes all the way back to the Genesis block, which is the power curve. Basically, it's the same thing. Log price, and log of time. Time measured in days since the Genesis block. Power is about 6, which it's been for a long time, since like 2016. BTC has done the same thing for the last 10 years. No financial system behaves like this. Okay, and that's absolutely true. It doesn't. Most of the time, financial systems work like this. They go exponentially with compound interest in a compound fashion. More and more fiat interest. There are certainly more and more inventions. It's the best time to be alive. I'm not one of these doom and gloomers. Always like it's there. There are benefits to the current system, but there's also a lot of pitfalls. But here's the interesting thing: is what Giovanni's been doing or has tried to do for a long time, and he's had this periodic model, is measure these different bubbles in sort of these waves inside the trend, inside a trend. And what you got here, all right, was 2027 for the next point of a major fundamental boom. All right, so after next year. Could happen. Could happen. And I need to, I want to just chart this out myself, but here's another interesting thing. I don't think they responded to me. I just put this out this morning. Because again, I need to sort of calculate this stuff out myself. But it is a strange view, and I'm not sure if Giovanni originally thought it was anomalous or not, this 2011 bubble. Stephen is saying it's not. But like, I remember this time very well, and right around that top in 2016, all right, right around this top, on June 15th, there were two, or was it June 10th? There were two empty Gox hacks. These were the first hacks, right here. And if I believe it, I still have this article saved because this was one of the things that turned me away from Bitcoin actually for a time. Was there was a big flash crash, and I think it was this day. It's not really recorded on the daily data, but there was a flash crash. And, and then it just went down from here. So what I said is, it's hard to believe that sort of joke of the enterprise of an enterprise empty Gox could paint this picture, which these guys are starting to paint. But I'm not discounting it. I mean, this is, Bitcoin had to start somewhere. It had to be traded somewhere. Just happened to be that a Magic the Gathering online exchange was the first place. But if you think about that, in that it was, Mark Karpelès sort of, anybody who knows the stories, there's just iteration of problems that happened from this first hack, and then a cover up, and then he found some more coins, and then he lost them again, and it is wild to think that this price that occurred primarily on empty Gox could show some stronger trends for Bitcoin in the future. So I need to do it myself. I always need to do it myself, and that's what I promise for you guys. But if we can get this sort of boom and bust cycle around the power curve, it would again be something that works totally different than anything else. Also, I'd like to see where exactly the 2021 top is here, because this is log, so it's going to get more and more compressed. Good morning, Gio. Where are you getting this from? RSIs? Yeah, I should just put the. I don't think I have a death cross signal. I'm sure I could just find it. Okay. Was there a chart somewhere? Obviously, a nice message, and something that a nice message and something that I'm basically talking about myself. So it's certain confirmations. But my analysis, again, it doesn't so much come with time, it comes with relative risk. We're as low as we can go relative to the Magnificent Eight or AI 8, however you want to call it. And we're also as low as you can go as it relates to gold. So a bounce seems very, very normal. I do think that's funny too, because that would indeed, confirm at least somewhat of a cycle on the 4 year, which everybody has declared dead. But we'll see. This is also very interesting. I haven't seen this completed through obviously the 2022, which would be important to see. It's great to see the extension of it from a time so far back as 2019. So this is again just bolstering the case of a 2027 boom. Maybe this chart. I'm trying to see a chart that this is different. It's not the same. As this one. So we'll see. We'll see. But yeah, over the very, very short term, I'm still always going to give my disclaimer that I don't know, but we are in extremely cheap positions. If you're a gold bug or if you're a tech bug, which are the two fastest growing sectors in the world right now. Yeah. This is the old Elliott wave. I could never get into it. I guess people are going to have to go back to other channels if we start talking about waves and impulses. Here's my I haven't even followed this guy's latest takes, or if he's even around. But here's the fact that this was always coupled with deflation really made me skeptical about Elliott wave. So Robert Prechter has consistently predicted a major long-term deflationary depression since at least the early 2000s, and it is before that. He was saying it before that. But this event largely failed to materialize in the broad U.S. economy as he forecasted. Critics and market analysts often point to his long-term deflation call as a major error in his track record, though he and his followers maintain he is not wrong, but perhaps early, and that recent events in Europe suggest deflationary forces are still at play. All right, so he's founder of Elliott Wave International. So there's something. And the other thing about waves, which again, I need to get, it's just too much to chart, guys, too much to chart. There's a lot of people that have talked about waves for a long time. Kondratiev would be the first one, I believe, Russian, in the 1800s. Oops, sorry. This says 60 to 80, but I believe some people even, sorry, 40 to 60. Some people have even talked about 80-year cycles. This is one of the things I do agree with Murray Rothbard on. He was never a fan of these. And the reason is precisely because of what happened in World War II. So, depending on how you talk about this, peak to trough, but you know, World War I and World War II intersect this. You don't have like two big drops during each. This is not, the amplitude is not short enough. If you're going for 60-year or 3-generation cycles, it's not enough. Now, I've gone on a tangent here from Geo's post because Elliott Wave can be super short term, which is what I know what a lot of traders do. But the big glaring problem with this is World War I versus World War II. But that's a long-term issue. And again, if you think that they're going to even let the market deflate, you just got to look at, you know, charts like this or charts like this. And these are indeed the best performing exponentials. Or charts like this. Yeah, that's probably true. All these guys are in and out from Goldman Sachs. You know, Ben Bernanke told Milton Friedman, it's because of you talking about adding liquidity during a crisis where, you know, we didn't do that enough during the Great Depression. You were right. He said that. Ben Bernanke said that at Milton Friedman's birthday, and he said, because of you, we'll never let it happen again. And anytime there's been, you know, a lot of people say this wasn't a real crisis in pandemic times, and it's probably correct to some extent, because I do believe if they'd done nothing, it would have been relatively smoothly. You know, instead we just had this meme stock, just madness, everybody getting money. I mean, if you just look at demand and savings deposits, that was real economy, real inflation, right to the end user, right? Even physical cash. But having said that, even if this wasn't a quote unquote real crisis, they still acted. And they're going to act. I mean, we saw Japan act. They're going to act. It's just, it's in politicians' nature to act this way. They can't stand idly by. People want them to paper over the problem. Big question will be this repurchase agreement money supply. And even this is difficult to calculate. I mean, I use, there's a sort of weird Fed release every quarter, which again, it's not going to be updated till December. So I can't give you third quarter until December. But this was a big drop in the repurchase agreement market, and thus a big drop in economic activity. Huge drop, 4.2 trillion to 2.4. March 2008 to December 2009. And then even when there was uncertainty here, they added this reverse repo facility, which gave more liquidity to market makers, to money market funds, to people that were that wanted a little bit more interest than the Treasury would provide, but also didn't want to take risk. So again, it's just babying the economy. So it's like a bank reserve for hedge funds and money market funds. That's what this is. This is the actual bank reserve. This is the actual money supply that traditionally banks use, and that you can see as well exploded from the GFC. But this thing is probably going to have a bigger say in the next crisis because they're just trying to take care of literally every Tom, Dick, and Harry in the economy. So in other words, they're going to print. Notice, by the way, when they've put the liquidity back, you can see it go back. This is more risk right now, more risk. So it's going to be rough when the crisis comes, but we already know the outcome. We know it. We've seen it twice in, let's say, the recent financial era. You don't see too many drastic changes in the money supply from the dot-com boom and bust. Which tells you something, by the way. I mean, they did do stuff like Alan Greenspan pushed interest rates quite low during this period, lower than they had been historically until 2008. But if they just, like a forest fire, let the stuff burn a little bit and then clear out the bad investments, that would have clearly been the better move. But it's hard to see all of it, right? I mean, like you don't necessarily see the bad seeds being sown for the GFC during the dot-com boom, even though that's what a lot of people believe, myself included. So there's a lot of signals you got to look at in many different places. There was a lot of money printing right here. I shouldn't say that. There was a lot of confidence given. Not as much money printing, but confidence given in the fact that the Fed was buying shorter term interest rates. It pushed interest rates lower. It was a signal to build for the future. Paul Krugman called for a housing bubble. All right, all these socialist policies. It was harder to see. Here, it's easier to see the bad seeds that they have sown for the future. I'm very keen to start plotting these things out, but also merge them with other economic factors, right? Like holding AI stocks or whatever. Because it very well could be that 2027 is, going to be the real year, say for an overextended run. And maybe that will be when this finally turns around. Right? When people stop their ChatGPT subscriptions for everything. And Bitcoin finds favor again. Like always, be calm. If you don't need fiat cash at the moment, I would take dips as opportunities to buy, but it can always go lower. But I do think what Geo has just pointed out matches the narrative that I've been saying. And I do think by the end of the year, we may still have to contend with this idea of 4-year cycles for a while. We'll see. We'll see. But I do indeed like the idea of a log periodic boom. I can show you, by the way. My log scales are very bad. But let's do log. Here's log. All right, don't view these. These don't make any sense. 7th of January 2009 is not out here, but the tooltip will make sense. All right, so you can look at this. Interesting. I don't even know why my software is cutting off the 2011 bubble. You can't see it. It's right there. 2011 boom is somehow cut off for some reason. Not on log. Probably because it's under 1 in some level. Yeah. It's cut off because you can't do log less than 1. Log, I believe. That's probably the reason that it's cut. What is going on? Is it the zoom? Maybe it's just the zoom. All right, that works. But that's more insane. There we go. Can't do log, this is negative. Less than 1 you can. All right. So the idea is it's not 4 years for the booms, but it's a log periodic cycle. So here, down, up. But then this again is hard. Again, not drawing these cycles, but Stephen's going to say that perhaps you get another cycle there, and then you see. I have to plot it myself. I'll just have to see. But I am open to something like this because it's grounded in the power law. And I think it's something to keep in mind. Look, at the end of the day, you shouldn't be able to unsee this chart. It's awesome. Let's take off these. Just enjoy that trend. It's a straight line, not on log linear, but on log. Here's a straight line on log linear. Tech stocks. Gold would do the same. Yeah, also good good recommendation. Look, I mean, if you don't need the fiat liquidity, don't stress about any of this. Just enjoy the ride. You can still see the huge delta, right? Just zooming in on this period, coming out of the crypto winter, we had a delta of, you know, still 9,000 on the upside and 300 on the downside. All right, and that number, although the multiple of that delta might be decreasing, it's still a huge delta, right? 163K and then 16K, so 10x difference. A little bit less than 10x difference at this point in 2026. 434K and 63K. It's all very exciting, if you ask me. And probably more interesting than the BTC Tech evaluation is BTC Gold. A lot of people got burned by Peter Schiff, at least want to try to get 10 ounces of gold for their Bitcoin. That is buying 10 ounces of their gold per a Bitcoin. I don't think they're going to get it. Anything's possible, but all right. So this is a little bit different than the quantile, but with my analysis on the multiple over under, they could get 8 now if it goes to the worst line, which is 0.1x. But that's so far down compared to the 10. And by the end of the year, it's still 8. Maybe 8 is the bottom. If on this chart we hit the bottom, but this chart, it's a little bit different than the quantiles. These extremes usually happen in the earlier times because I'm not updating the multiples. You know, I'm not taking any residual or decaying the percentile bands. I'm just keeping it the same. 0.1x, the power trend is the worst it's ever been. All right, so if you want to get back to that, that's where it is. 8-9 ounces of gold would be the absolute bottom of a Bitcoin price. That's for sure. Good morning, Pan B. Hope you're all right, man. Are you in Ukraine now? And by the way, I completely agree with this sentiment. You know, the herd is usually wrong. I still remain, I think, the last person that thinks there's still some kind of a 4-year cycle. So, you know, we're going to see. We're going to see. Need to reset that. Yeah. It would be interesting to see a stat on that point, in fact, Geo. Good. So you're sleeping better. How's your family doing? Do they have power? Leads me into just a couple geopolitical things. Here's Tomas Ilves, someone I really respect, president of Estonia. Meanwhile, Putin says, he said this, I think, in, where was he? Uzbekistan? I don't remember. Tajikistan, maybe. Russia is ready to continue the war to the last Ukrainian. Pretty clear statement of genocidal intent. And of course, if you've been following the wacky woke right, polymath Glenn Greenwald has said for years it's simply a border dispute. Is it really just a border dispute? Also, if anybody hasn't seen this, I know plenty of you from this channel have, but I'm a huge fan of Gary Kasparov. He said this a couple days ago. For 4 years, Ukraine has been fighting for the whole of Europe. NATO was created to fight one war, not to go to Afghanistan, not to go to Syria, one war to save free Europe from Russian aggression. Ukraine is the only country that is fighting this war, and we are still discussing should we include them in NATO or not. It's a remarkable time to see these Ukrainians just fighting for Europe. Kasparov's great. I mean, like every other Russian, unfortunately, he has failed in what's the word? Reforming their system, but at least he tries. Also, back to the long wave stuff, right? And the Kondratiev waves, the Elliott waves. Long term. I'm not talking short term trading, but long term. This also gives me a little bit of pause on how much these periodic cycles, how much faith we can put in them. I'm not saying they won't work. It's possible they do, but again, on the boom, if 2011 really was such a consequential boom for this theory, if it were to work, it's just wild because I remember that time and it's just, the bust was caused by one guy, Mark Karpelès, losing his keys. You could argue that, of course, it had to happen somewhere at some time, which is what I said here. We had to start somewhere at some time with Bitcoin. There's no doubt. And basically all the pricing action you see here is from empty gox. Here I have it. I have it going back a little further even than this, and it's a Bitcoin Pete today. It's very estimated. It's very rough. Oh, my friend, I wish we could. I'll show you. Did you see the interview that I did with Sean Pinner? That's certainly true, Geo, but how much time are we buying the Ukrainians? U.S. is not giving a dime for a year. I was listening on the BBC. There's been a coup in Guinea-Bissau, I believe. Guinea-Bissau. It's a member of one of the major currency unions, actually. In Africa, there's two majors: the Central African Currency Union and the West African. Both are pegged to the euro. Originally French franc currency colonies. Let me show you something. Where's this damn? I showed this for Sean, who was one of the heroes fighting for Ukraine in 2022. All right. So this was the US. This is Western Europe, basically. Doesn't include Finland, doesn't include Sweden. They came after 1999. And all of us, Baltics, Poland, Romania, Czechia, Slovakia, Hungary. That great member. So here's Ukraine. They need at least 65 billion next year. Here's Russia. Probably more than that they're spending right now. They hide stuff in there. But here's Eastern Europe. You have a disjointed, discombobulated, Hungary in the wrench. Sorry. Hungary, complicated group of European nations trying to defend themselves against Russian imperialism. Collectively together, we only spend probably exactly what Ukraine was, and our know-how is way worse than Ukraine. That is true. But we need to draw, like, the problem is we're going to need to draw more here. You can see from 2022, spending has gone up quite a bit, but it's not enough. It's certainly not enough for us. It's remarkable what Ukraine has done for Europe. I mean, it's remarkable. Throw China in there as well for you. They'll pass Western Europe at some point soon. No, they're not. They're just not. The frontline states are. And as a percentage of GDP, we do the most, but, you know, your country included, Romania included. But I mean, you see the size of us. Yeah, we spend a little bit more than Ukraine, but our know-how is half, 1/10. NATO would be stronger with Ukraine in it. I don't see the problem. They're openly calling for genocide in Ukraine. Glenn Greenwald says it's a border dispute. All right, guys. Yes, he is. It's embarrassing. I mean, it's just embarrassing how these guys, Tucker and Greenwald, and they're all just grifting. Tucker keeps saying that Poland should have just been invaded by the Nazis, and UK should have stayed out of it. By the way, it wasn't just Poland. I mean, all of Europe was taken over by May 1940. Britain still hadn't done anything. It's not like Europe would have been happy with that scenario. Jokers all around, guys. And more money printing coming. I'm not going to have this updated till December, which is coming up, but it takes a long time to give you quarterly updates of this supply. And it's going to start growing more. I think it's probably going to be it for me today. Bitcoin remains super cheap. Be calm about it. And yeah, sounds like we're maybe all in agreement on this channel, at least, that there could be a bounce. I just say commend yourselves on learning about the power law. You're one in 10 for Bitcoiners, and you're 1 in 1,000 for the world. You know, here's the trends stopped 7 years ago, and we know where it went. It's a wonderful trend. And back to this question, I'm going to have to come back to you. Power laws are proportional. So when they talk about percent of GDP spent on the military, that's a power law. You can take military spend versus GDP, put it on a log scale, become a straight line relationship. I'll try to maybe put some more things like that to paper next week. So good comment here to close it on. Thank you, Paul. All right, guys, have a good weekend. It's going to be it for me. Happy Thanksgiving if you're watching this from the States. Happy Black Friday. Enjoy yourselves. Thanks for watching. Catch you on Monday.